Hey guys, welcome to a late night stock talk. Today's April 30th at 8:57 p.m. Eastern time. So some changes happened in the markets today, and you guys might have observed this. Let's take a look at SPY, which tracks the S&P 500 on the 180-day chart using the Thinkorswim platform as always. So as SPY loads up, I just want to show you guys that we have seen a lower high that's been occurring in the past few months, and at the same time we've seen a higher low. Now in the more nearer term, we did say that yesterday in the video we talked about a minor resistance at 268. Why was this the minor resistance? Well, it wasn't major because we talked about the breakdown candle. This is when we started breaking down to test another support. So this would be a reasonable resistance. What happened today? You guys can see that during pre-market, we attempted to test this area. We failed. As a matter of fact, we tried to test it again in the first 4-hour candle when the markets open. We failed once more, which culminated into this drop. Now, there's a couple of things to keep in mind. Recall yesterday we talked about this area. Why was this area important? Because we were on a potential uptrend, right? Now, is this off the table? Of course not, right? This is still possible that we get up there. Right now, it seems a little less likely based off what happened today. So let's first talk about this area and why this area is so important. So recall that this was another resistance area, and this resistance area was at 271.40. Why was this a resistance area? Well, we identified this was the gap down area during this day on March 24th, March 23rd, as well as it reconfirmed the resistance on this day. And this was last week, I believe. So this area is the resistance line. At the same time, we talked about SPY making lower highs, and apparently enough, it converges with each other at that specific area. That has to say something because markets are generally attracted to those areas, especially when there is a pattern. Now, what is that pattern that we saw yesterday? Well, we talked about the 1-year chart for SPY in which, look at this. We've had a huge gap down, recovery, smaller down, recovery, huge down, recovery, a smaller drop, and we were supposed to recover similar to here, right guys? Where we're supposed to make a higher, between these two peaks, a higher high. It would be reasonable to assume that we would hit this area. Now, today things changed, and this was really interesting because we did drop. Does that mean that the markets does not have enough energy? It doesn't even have enough energy to get up here. Probably, right? Probably. So what is the best trade right now? Well, in my opinion, we don't know because we thought that it would go here, right? We don't know which direction the market will pick for several reasons. Now, we have, for example, Apple earnings coming up in the next few days, right? That might put a jolt into NASDAQ. We have FOMC meeting minutes that's coming out sometime this week. I think midweek as well. That may move the markets. And at the same time, note that today is the end of April. Right? The end of April, so, whatever manipulation or sell-off or that's happening, that's something else to note. The best trade to make right now is no trade at all. It could easily start doing some consolidation at this area. If we have a huge spike tomorrow, retest that area. At the same time, I can see it retest back to its support at 261.50. Right now, once again, we have to be cautious. Now, I want to take you guys to the big picture because the big picture does paint nicely what is going on. Here's the 3-year chart. Looking at the weekly, so each candle bar represents a weekly start and weekly end. What exactly is this pattern? Do you guys know what this pattern is? Okay, well, if you guys can't see it, let's just zoom in on this area. This is a bear flag pattern. Look at this, guys. It goes up, bear flag, right? We have some consolidation at this area. We have already went down once, went down twice. We're doing another bear flag. What does that mean? there's another potential move down. Now, this is just based off of the 3-year chart. Remember, the 3-year chart is more important. It gives us more detail than the 1-year chart. So I wouldn't be surprised if the markets start coming down to retest the support at 258, as well as a potential support around 255. That is obviously not in doubt, like no, not in question. You guys can see that it came down, recovered, down, recovered. Is it the time to go down now? Or will we reach this circular area before we go down? This week probably will tell the story as we get all these news items coming up. So keep on the lookout for that. But in the meantime, I am staying out of trades that kind of move with the markets. Those trades include LABU, TQQQ, UDOW. All those trades are off the book for now. Looking at volatility, now this is TVIX, which does track the VIX, which follows the VIX or volatility. So generally, as stock markets are moving down, the VIX or the TVIX are moving higher. What happened today? Interestingly enough, look at this 180-day chart. We are still under the 20 EMA line, even though the markets went down. Dow Jones went down 148 points. The VIX is still showing that we have a potential bullish run for the markets. So we are getting some conflicting information, which is why we don't take a trade, especially if we don't know which direction the markets are going to go, right? So right now, it's hard to say, especially with all the news items coming up. So that's the VIX. Now I want to take you guys to crude oil futures, which follows /CL. So this is crude oil futures, and we've been talking about this over and over and over again every single day. What have we been saying? This previous resistance at 67.73 has been acting as the new support. How many times have we tested this support? Once, twice, 3 times, actually many times in these 4-hour candles, right? What does that say for crude oil? Crude oil is bullish. It is consolidating at the support area. It's trying to establish new highs. There is no doubt about it, right? You guys can see that even though it came down, this 4-hour candle came down, look at this massive spike. So regardless of any news that came out, we still see crude oil holding above its support. So I'm kind of in amazement why people are thinking about, I can't believe GUSH is still going up, right? GUSH follows the crude oil futures, generally speaking. They're like, I can't believe GUSH is going up. I can't believe DRIP is continually to fall. Well, I can totally believe that because this is something that we've talked about, right? So if you guys have watched these videos, you guys know the pattern that we have seen. And you guys can see that crude oil on the 1-year chart, this is even clearer, right, guys? This support has held very well. And what is this showing? We're holding over the 20 EMA line, showing that we have a potential uptrend to come. We have a potential to break 69.55. So let's take a look at GUSH, which follows crude oil. There is GUSH, right? We talked about GUSH. We need GUSH to close over $32. Today, it did close over $32. And as a matter of fact, something is happening, right? What's happening, guys? We're seeing consolidation at the resistance area. And at the same time, looking at the 3-year pattern, we established that GUSH has been making lower highs. Look at what happened now, right? Yes, we're on the weekly chart, so this chart isn't completely finished, but as of Monday, April 30th, what do we see? Even though GUSH is moving sideways, kind of consolidating at the resistance, we've pushed over the 3-year major resistance. What does that say for crude oil? Once again, that proves that crude oil is still bullish. Now, one thing to keep in mind, and we've talked about this in every video, is that we do see a resistance area at the gap down area, right? This is when crude oil or GUSH gap down, starting the downtrend, and this is reasonable to assume that this is the resistance. And of course, we do see that this is the resistance at 33.34. Now, have we been able to close above this area? Not yet, right? You guys can see that these candles are leaning towards closing there, but we still are testing the resistance. Regardless, GUSH is still bullish, right? So let's take a look at DRIP. Just for amusement's sake, everyone's still talking about DRIP. What happened today with DRIP? we made new lows, right? It doesn't matter. It went from $8.11 to $8.38. We made new lows today. Just, you know, we've kind of been talking about this, right? What does that mean? That means that even though it recovered a little bit, it has potential to go lower. Take a look at the 3-year trend for DRIP. What does that say? Like, I can't even look at this. These candle bars are so small. This literally is the 3-year low. No joke about it, right? So why invest in something? Why hope for a reversal when there's a really good play that is showing up, which is GUSH? Doesn't mean you guys have to go into it. I'm just saying that GUSH is clearly on an uptrend. Why hope for a DRIP reversal right now? It just doesn't make any sense. And looking on the 1-year chart, we've talked about this, right? Every time we see a rectangle on DRIP, and this is the major support point, it keeps going down. Major support point keeps going down. Major support point, it keeps going down. Once again, we have a major support point, and you guys might see some consolidation at this area, but you know, we're still trying to catch up with the 20 EMA. Any consolidation at this area means almost nothing because look, we did consolidate in this area just to keep dropping. We can consolidate over here just to keep dropping. It's just because DRIP fell so much, right? It fell so much that, you know, there's some pity, you know, like, oh, you guys lost a lot. Let's consolidate a little bit before dropping. You know, this is just, no, DRIP is just one of the things. It's on a downtrend, so kind of hard to see investment in this area, this ETF right now. Taking a look at /GC, this one's another interesting one, right? We know that JNUG went down 4.5% today. Looking at /GC, which tracks gold futures, we do see a support at 1312. Where is it trading at right now? 1315. So you guys need to look for a potential reversal in gold, right? We are at the support, no doubt about it. And let me just extend this to the right. This is the support. We've tested it 1, twice, 3 times. We're on the 4th time. When we do see a probable reversal, this is a possibility of a good entry point to JNUG. Just note that we have tested the support 3 times. In the 4th time, and we're testing the support many times, there is a higher likelihood that it may drop below that support at this point. So just to keep on a lookout for that, but regardless, if you guys do want to buy into JNUG, you know, we're getting close to the point where we can buy into JNUG and set a close stop loss, right? Just in case it starts closing below, let's say 1307, right? You need to set that stop loss so that you won't continue to lose any more money. But this is a possible reversal play that we could look for JNUG in the near future. But right now, is there any confirmation of reversal? Not yet. Not yet, guys. So looking at JNUG, here is JNUG right here. We talked about the support, right, at 1423. JNUG tracks pretty much follows the gold futures. We talked about this. 1423. What happened? We broke under the support, and we're looking at the 1-year chart, my bad. So here we go on the 180-day chart. We broke under the support. What does that mean? There is a potential for JNUG to fall a little more back to the next support, which is around $13. That's why we don't have a confirmation of a reversal yet. Gold has a possibility of moving down a little further. So, you know, watch and see, but not actively invest, in my opinion, at least right now, right? At 9 p.m. Eastern time. Okay, looking at, let's see, natural gas, right? Natural gas. Look at natural gas. We talked about this pattern in which it did cross over the resistance, 2.807, but we wanted to confirm, was this the new support or was this just a false breakout? False breakout, right? It came back down, and now what are we seeing? Well, we know that this is a possible support, right, at 2.754. We do see a little bounce back up, right? But is this a sure enough bet that you would want to go into UGAZ, which follows natural gas? Once again, you know, advise your risk to reward ratio. Is your risk to reward ratio there? Well, in my opinion, looking at just natural gas futures, it's like a 1-to-1 ratio. Not good enough for me. If it's not good enough for me, probably not good enough for you. I mean, of course, make your best judgment, but that's just not a good ratio to look for. So here is UGAZ, right? UGAZ has fallen to around $57.04 right here. And it's actually trading around, yeah, around that area. What does that say? Well, we still have a potential for it to fall to the support, which is around 53.50. There's more room for UGAZ to fall. Does that mean we go into DGAZ? Well, again, not necessarily, right? We talked about DGAZ yesterday in that we are near either the midway or the late point of where we would exit. So why start investing now in the midpoint to the late point when people are about to exit? Why would we go in, right? We want to go in near this area where it's trending up from the support. We don't want to invest when it's already over the 20 EMA where most people are, thinking about taking their profits by that point. So that is UGAZ and DGAZ. So let's talk about a couple of tickers once again. We visited Square a couple of times. So looking at Square, just note that Square, look at this massive bar today, right? We hit 48.90. Let's look at the 1 minute chart just for amusement. 48.92. We dropped to 45.76. What is going on with Square? Well, partly it was because market movement kind of pulled it down, right? But at the same time, there's some catalyst here that pulled it down even further. You see this massive sell-off? So, a couple things to keep in mind for Square. We have earnings coming up. This might be a propagation or a catalyst for a big move up and down. Looking at the 1 year chart, 3 year chart, right? What do we see? We do see holding above the 20 EMA, right, on the weekly chart. But be careful because we do have a green candle followed by a red candle. That's generally not a pattern I like. But once again, earnings might pull it further up or further down. So that is something to watch if you guys are in Square. So you guys called out MJ. So MJ, just looking at the 3 year chart, we had a huge spike up and now we're on the downtrend. I'm not even pulling up the 180-day chart, right, guys? I'm just saying that on the 3 year chart, at least, it's on a downtrend, clearly. So let's look at the 180 days. Right, so looking at this, what do you guys see? Here's the peak. Here's a peak. This might be a peak. This might still go up, but clearly, this is on a downtrend on the 180-day, right? You guys can see that it's been making lower lows and lower highs. This is not something I would actively invest in. Even as a day trade, is just look at the volume, right? Look at these candlesticks that kind of these sideways candlesticks, right? The price didn't move at that point. Right, this is not something I would go into. Twitter, this one's interesting, right? Twitter on the 180-day. Let's take a look. So Twitter went up 4.5% today. So we'll have to wait for this to load. Oh, there it is. So was it earnings? Okay, so we did. So you guys can see that Twitter pretty much has followed the markets, right? As kind of markets have been pulling up, Twitter has been pulling up on the 180-day. When the market started, actually it kept going up. So it didn't really follow the markets that much. What do we see? Well, we do see Twitter having a support at 26.76. We do see another support at 28.23. This is actually a pretty interesting pattern. Oh, sorry about that, guys. I hope you guys turn the volume down already. Oh, all right, guys. I have to make this perfect. 0%. Okay. So there you go. There's the support, right? But what can you guys see? Once again, we are still making lower highs, right? So even though we have a support here and we are making higher lows, I want to see higher highs and higher lows without being too overextended. This, even though I do like this higher low, I don't really like this kind of trend. And what can we do if you really wanted a Twitter trade? What would you do? Well, this as the support, right? When it comes down to the support, take advantage of that. And then you can see that the this EMA line, which is a 200 SMA line, has previously acted as a potential resistance. Why is that the resistance? Well, you can see that it went kind of over the 20 EMA line, kind of fell down, could never recover. 20 EMA line came down. 20 EMA line, we had a big jolt up, but it just came down. Several rejections here. So we can expect 20 EMA line or somewhere around here to function as a resistance. So if it does come down again, you guys can take advantage of what? Buy in around 28.64, ride it to around the 20 EMA line, 5 to 7%, but at the same time setting your stop loss where, guys? Well, below this low candle, right over here. So set your stop loss maybe around 2% lower, so around $28.05, somewhere around there. But that is a reasonable strategy. Do you go in now? No. Right, we don't go in now, right? Just looking at this trend. So last one I want to talk about is JCPenney. This is something that we've visited many, many, many times. We talked about JCPenney because we talked about it here. We talked about it when it was going up. We talked about short selling it, right? You guys just visit my previous videos, and I talked about JCPenney like 1 week ago and 2 weeks ago, 3 weeks ago, right? Ride the trend. When I told you guys this is a possible short sell when it goes back to the 20 EMA, look at what happened, right? It went to the 20 EMA at that time. Make sure if you guys were in JCPenney, short sell. We're back at the support, 288. We're very close to the support. Does that mean you guys can buy it now? Well, just look for a possible reversal, and there's a possibility that you guys can buy in at this point, right? But again, take a look at what the markets are doing as well, because if the markets are going down, the support might not hold. But if you guys do buy in at this price, you can set a tighter stop loss at 2.5%, perhaps around $2.83. But at the same time, your potential for profit, even if you just wrote it up 5%, conservatively speaking, back to the 20 EMA, that's still a pretty good risk to reward ratio. So that's it for today. Thank you everyone who joined me for this late night stock talk. I just came back, and in the next few videos in the future, it will be a little later than usual. So just look out for those videos. Like if you like this video, subscribe to this channel if you want to keep up to date, and I will see you tomorrow for another stock talk. Happy trading.